We are back for lesson 4 in Outlier University. Does everybody have their pen and paper ready? Because this is going to be a good one today. Awesome. Very cool. All right, let me share my screen and we'll get busy. Let me introduce myself real quick. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So you probably want to go ahead and subscribe if you haven't already. Today is lesson 4, indicators that actually work. Now, when you come into trading, this is probably the most exciting, most fun part, is the idea of, hey, there's an indicator that's going to tell me how to make money, right? Hey, there's an indicator. There's this magical line on the chart that's going to tell me exactly where to make money. I would love to hear from you guys here live. What indicators you've used in the past that had this mysterious money-making wizardry behind it. I'm really curious to hear what you've used in the past. Go ahead, Joe.
Support, resistance, RSI2, stochastic, volume. I mean, the list goes on.
For sure. And some of those, like support and resistance, they when I tried to trade with those, it just felt like, what is this voodoo? How do I even figure out where support and resistance is on the chart? Right? It's just subjective. No, I can't trade subjective. I need to know exactly where the support is and where the resistance is. Right? So totally get you on there. Okay, who is next? Paul, go ahead.
Any talking head on a financial news network. That was my plan.
That's a really good one, right? Like Jim Cramer, right?
I wasn't going to name names.
No, but that makes a ton of sense, right? Because I've been on TV. I've been there. I've done that. I would bet I've been on TV 200 times. And while it seems really cool, it's just some random guy giving his random opinion about a random stock, right? He can be right, he can be wrong. And maybe he has something to back that up. But a lot of the time, like my publicist told me the very first time I was going on TV, she said, listen, doesn't matter if you're right, doesn't matter if you're wrong. Everybody's going to forget about it in 5 minutes. And I was like, I paid you how much to tell me this? Awesome. All right. What else have you guys used in the past? Ian, go ahead. Aussie Ian.
Yeah, with trend lines on candlestick charts.
Trend lines where you had to draw them yourself? Yes. Okay. There's a bit of a delay because Aussie Ian, of course, is on the other end of the world from Texas. Now, that's really interesting, and I struggle with that too, right? I remember trying to figure that out, and it's like, okay, hang on, let me share my screen real quick because he's got a fantastic point here. If I'm going to draw a trend line, do I draw it from here to here, or from here to here, or here to here, right? Because if I draw it from here to here, that gives me a very different result than if I draw it from here to here, right? Like, does this even matter if it's below there? Dude, I get it. I completely get it. That's one of the reasons right there where I decided, like, it doesn't make sense to me to draw trend lines when I could just use the math, right? The math of the moving averages. It's just math. You can't fake that, right? You can't make it up. You can't be the YouTuber who goes back and is like, yeah, that's what I meant when I drew it this way, right? That's actually what I meant. Because they always Monday morning quarterback exactly where they were supposed to get in. Who else? Anybody else got a story to share?
It's very subjective.
JC, go ahead. You are muted, my friend. Right. There we go.
Well, yeah. Since I'm the newbie in the group, I'll tell you how I was doing it, how I got into trouble, and it was following the little text group that I'm in, which are a bunch of nice young cats. They're all in their 20s. I think the senior one is 30 years old. One guy went from 15,000 to $1 million over 8 years. Fine. But it's basically a gambling game. Now, some people get really good at gambling, like Dana White and Mickey and all those guys that are ousted from casinos because they have a system. But 95% or maybe 97% of people don't have the system to beat the casino. And so I had 15 calls following everybody's call, and then the bottom dropped, and whoom, but $5,000, $6,000 evaporated.
Mm-hmm.
So that's where I was at. Now, what am I doing now? Learning, because I'm still not using it. The 10, 20, 50 is money, because that's like you say, math. You just see where it's crossing over. You okay? You see uptrend, downtrends, bingo.
Mm-hmm.
Then you have the heat maps, the sector, the market, all of that in green, and you can see it going up, coming down. And those are the things that I'm learning. I'm going, wait a minute, I can follow this. The outlier 9, I can follow this. Little check marks. And you mean to tell me after 9 checks, because once you do sector and market, you're free if you're going to be doing all AI. You're already in there. Now you're just looking at stocks. So you mean 5 check marks, and I'm pretty much in the clear with a buy signal? Where do I? So that's why I'm so excited, because I went from guessing, gambling, following the herd, to now saying, okay, there is a system. I'm starting to understand it. And you know what? I can follow this. This is learnable. So that's the exciting part for me, man.
Oh, that's great. Thanks for the feedback on that, dude. Because like when I'm going through this, for me, I've done it for so long that it just comes second nature, right? Just like when you're doing, personal fitness with people, right? It just comes second nature. So it is a challenge for me. I'll be very honest, to break it down on the smaller pieces to make sure that I can teach, the individual components that'll eventually build your Noah's Ark, right? We got to build it one board at a time, but eventually we're going to be able to survive the flood.
Oh,
so
and one thing,
yes, sir.
2 seconds. I'm willing, because I have experience putting exams together, the whole psychometric stuff behind the exam. If you would like the class on our own, we'll do class notes, redo the quizzes, and all of that stuff for future classes. That's my contribution for you doing all this free stuff and for the industry, because now this is becoming my industry too. So JC, if the guys are willing, maybe we can all do the chat. Okay. Dude, as a team,
for sure.
That's going to be our payback to you.
I love that.
To you. Thank you.
I love that so much. Thank you. And to JC's point, right? I don't have to do this, but I love to do this. This is how I give back, right? Is being able to teach this to help other people. And I get dozens of messages a day. Chris, you've made me X thousands of dollars. Chris, you've saved me X thousands of dollars, right? The objective here is to save time, make money, and start winning with less risk. And we're doing all that without a single bit of a paywall, right? We're doing all that for free here on YouTube. So the way that you can pay me back is by telling everybody you know. So let's get to today's lesson. Lesson number 4, indicators that actually work. Now, before we get too deep, I actually want to go through quiz 3 review. Reason being is in quiz 3, I wanted to hear from you gentlemen and have you watched the videos from quiz number 2 and tell me some of the things you learned, right? So it doesn't say who said what. So this is all anonymous here. But feel free to chime in if you see something you want to add to. Like this person right here wrote 11 different points here talking about all the things that Mark. So the first video is from Mark Minervini. One of the things I picked out was don't go against the herd. Only buy stocks going to new ground. He really is the contrarian doing what most people are not going to do. And that was something I tried to get across in the video last week is buying stocks as they're going to new high grounds is hard. I know it sounds weird, but people don't want to do that. They think I've missed the boat. I've missed the move. I can't chase it, right? But the only way you're going to get paid is for it to go higher and higher and higher and higher. And that's really hard to hold on to. Another one y'all wrote, risk is more important than anything else, right? That's why I talk about being a risk-first trader. Being a risk-first trader is going to keep you in the game. Risk management is one of the most important keys to be profitable. Also, having a strong mindset to keep to your plan. I saw a couple of people in Discord sharing their plans with other people, getting feedback. I love that. I think that's a great idea. But I also want you to keep in mind that other person that's giving you feedback, they're not going to be the one executing the plan, right? I've worked with these people. I have learned so much from them, but I don't do exactly what Mark does, right? I don't do exactly what Steve Burns does. I took bits and pieces from them and made it my own. So as great as I think it is to share that with other people in the community, I really think that's great. Be sure at the end of the day that you focus on what works for you. And one thing that I don't look at are fundamentals, right? Mark talked about focusing on sales, earnings, and margins. But to me, those are meaningless because who cares, right? I mean, it's not going to pay the bills at all if their sales are going up and their stock price is going down, right? Deep thought. You probably have something that you'd want to scream into your bullhorn if you had a chance to do so.
Oh, I don't know. You tell me. What would it be? Something like securities.
Yes, that'll work. Yeah, that'll work. I like this one. Sikadfu. There we go. I made that just a little bit ago. Sit in cash and don't F up. That's what that means. And this is one of those days where it's sit in cash and don't F up. Exactly. And then had y'all watch the Steve Burns video and a few responses from there. Big rewards and small losses. That's how it's done. SMA, so simple moving averages are better for slower stocks, and exponential moving averages are better for fast moving stocks. We're going to talk about that more today, in fact. The path of least resistance is the easiest way to make money in the market.
Yeah.
And someone wanted to point out that I had the link for both of them as Mark Minervini. So first off, shut up. I tried my best. I am human. Second off, I've replaced it in quiz number 3. So if you go back, it's been fixed. Okay. So anyway, I appreciate you guys taking the time to give those responses. I heard somebody coming through on the chat here. No. Okay. All right. We'll get busy here. So that was the quiz 3 review. So working in lesson 4, there are unlimited opportunities in the market. I see a typo. AMOUNT. There we go. Not a capital N. There we go. Now, this is similar to the slide that I showed last week because it's so true. Always remember, there are unlimited opportunities in the market to do anything, right? I am not going to sit over your shoulder and say, hey, Joe, do this. Hey, Paul, do that. Hey, Mikey Mike, that's a terrible boneheaded idea, right? You should listen more to Dave, okay? Nobody's going to be there to do that. You don't have a boss over your shoulder. Now, there are an unlimited number of indicators that'll give you an unlimited number of signals every day. And every indicator has an unlimited number of settings, right? So legitimately, I don't know if someone's ever done a study on this, but with all the different indicators that you could add, right? All the different indicators that you could add, all of these have basically an infinite combination of different settings for those indicators. So it's almost impossible to say that this is the very best one because that would never work. You would spend the entirety of your lifetime trying to figure that out and still not get it right. The hard part is figuring out which opportunities are worth your time. Now you need to listen to what the market's telling you. Sounds familiar, right? And not tell the market what it should be doing. Because anytime you say the stock should do something, you are not listening to what the market is telling you, but rather you're telling the market to listen to you. And you do not have a big enough bank account to make the market listen to you, unfortunately. Just not going to happen. Now, let's recap here on the moving average types. There's 2 different types. There's the simple moving average and the exponential moving averages. Okay. Now, there's lots of different types, but these are the ones that are most common. So simple moving averages, it adds up the closing price over a set number of days and divides by that number. Super easy, super easy to understand. Let me pop off these. We're going to look at these in a little bit. So if we look at the last 10 candles at any point in time and divide by 10, so just add the closing price, divide by 10, that's going to give you your simple moving average. Super easy. So a 10-day SMA takes the last 10 closing prices, adds them up, and divides by 10, and it treats each day equally. Now, an exponential moving average, it gives more weight to recent prices. So while simple is all of the moving averages are exactly the same in weighting, exponential gives more weighting to the more recent prices. And it means that it reacts faster to new price moves. It smooths out the chart so you can see which direction things are going, like we talked about last time, but it's more responsive. Now, to me, this is like a holy grail, right? Not the holy grail, a holy grail, because there's so many different exponential moving averages you could put on, but it's math-based. So I don't have to say, oh, I didn't connect this dot to that dot, and I didn't connect this low to this high, or any other kind of trend line baloney. But it's also more responsive, meaning that as prices are changing today, the newer prices have a greater weight than the older prices. So I'll be able to move faster with my dollars to go along with the price of the stock. So simple moving averages are slower, even on the same period. So a 10-period EMA versus a 10-period SMA, it's still slower. It's smoother, and it's an equal weight to all days. Exponential moving averages are faster and more sensitive to current price action. Now, my pro tip here is to stick with one type and never look back, right? Because you can do unlimited opportunities. All of these are available to you. But just pick one, exponential or simple, and never look back. Now, you can test out different things, right? You may go through and do some back testing and see like, oh, you know what? I actually prefer the 10 simple. That seems to work better for me and my style of trading. More power to you, right? I'm just telling you, once you figure that out, you want to be consistent. You don't want to be bouncing back and forth because you're not going to be able to develop a solid trading plan when you say, okay, on Tuesdays, I like simple moving averages, but Thursdays and Fridays, exponentials work amazing. And then there's that other type of moving average. I can't remember off the top of my head. I think it's called like a Hull moving average. Oh man, on Mondays, those are killer. It's never going to work. You have to be consistent. And that's why I say pick one and never look back. Let's go to the next slide here. So to recap, we talked about this the other day, but this is important. The 50-period EMA is your longer term trend. So on a daily chart, that's your 10 weeks out. The 20-period EMA, 20 days, is 4 weeks out, and that's your intermediate term trend. And the 10-period EMA, that's 2 weeks out. That's your shorter term trend. When all three of these are in agreement, that is when you are looking in the direction of the way the stock is going. Okay. Now, we could look at any chart out there, and without anything on it, it gets a little bit difficult to see which direction it's going. I think we used Coke last week, specifically right here. Like, which direction is it going right here? It's hard to tell. But if we add on the short term, the intermediate term, and the long term, we can have a way better perspective as to where prices are going. And you can see they're trending up. Sideways, but up, right? I mean, this is the same price as it was here in February to May. 3 entire months, February 21st to May 21st, the same price. However, over that period, prices have been trending higher. Do we see that? Nod your head if you see it. Okay, cool. Now, the way that I stack these. Yes, Joe, go ahead.
So a question. So you were just showing a chart. It looked like it was a one-day chart. So each period in that case is 1 day. So 10 periods is 10 days. It equals 2 weeks because there's 10 trading days in those 2 weeks, right?
Correct.
Awesome. Thanks.
Yes, you got it. Now, with holidays and stuff, it'll kind of mess with it, right? Like Monday's Memorial Day, so the market will be closed. So it'll be, 4 days from 1 week and 5 days from 1 week, and then another 1 day from a third week, basically. But overall, it's 2 weeks, in a nutshell. And that just helps you whenever you line all three up. Zachary had a question here in the chat I saw. Why does it work so well? The reason it works so well is you're stacking your short term, your intermediate term, and your long term together. When they stack together, it flows, right? This is the market telling you which direction it's going, rather than us trying to say the market should be going higher, it should be doing this, it should be doing that. From all three time frames, short, intermediate, and long, all works together. JC has a question. Oh, hang on, you're muted. I appreciate you guys muting when you're not talking, by the way. This helps a lot. It still shows you're muted on my end, JC.
Right in the
Got
banner.
Got it.
You're
Sorry. Can you go back to the chart, please? Back to the chart, please.
Okay.
Okay. So we're going to go to the first place where it closed at 71.49. Over here on the left, we see a green candle where it closed at 71.49. A little bit up, and right.
This one?
Up a little, right there, right?
Yeah.
Yes. So theoretically, if down on that blue line, or if you would have gone in there because you think it's an uptrend, let's say, and you would have sold somewhere at the top, maybe not so much at the top, maybe coming down, and then you would have picked up again when you had the next uptrend, although they're very short, and I understand that, but you might pick up 2% over here, 3% over there on the second up. And on the last one, which is a little bit bigger, you might have picked up, let's say, 4%. That's still better than doing nothing over 4 months.
That is a fantastic point. Price unchanged over this period here. Yet, if you're trend trading it, like JC's talking about, you can pick up some here, you can pick up some here, you can pick up some here, and you can pick up some here. Absolutely. Absolutely. Great observation, by the way.
Okay.
Yeah.
Cool,
Perfect.
Cool.
Okay. So what we're looking for is the 10 period over the 20 period with price over the 50 period. Now, I know you guys know this is not the first time you've heard me say this, but this is the trend template. 10 over 20, price over 50. It's simple and it's beautiful because it works. And it works because it's just math. It is just math. There's no guessing. The math will tell you which direction it's going. Now, of course, it'll bend. And sometimes you might make a buck or lose a buck, but you're going to be in the direction of the way the price is going. Now, I can say this with conviction because it's undeniable. It's just math. Price must move above the 10 EMA to trend higher. Okay. Price has to. It cannot mathematically trend higher without it being over the 10 period EMA. It cannot do so because remember, we're talking about the average price of the last 10 days. The only way the average price of the last 10 days shows that it's going higher is if it's above that price, right? Mathematically speaking, if you're just taking an average and you never get an average above, or you never get a price above the average, it cannot go higher. However, if you're getting prices above that average, it's going to be pulling that average up along with it. That's the simplicity of it. Same on the 20, same on the 50. Because the math tells you which direction it's going, it makes it so much easier. Joe had a question.
Would we ever see a buy signal for a stock in Outlier if this key was closed?
The trend template?
Yeah.
Oh, yeah, for sure. Hang on 2 seconds here. We'll pull up any stock. We'll pull up any stock here. We'll do Palantir. Now, this is actually where I lost a lot of money because I was trying to short the market as it was going up. Like if it got a sell signal right here, I'd try and short it, whereas it was still trending higher and I was losing money. So that's something that I had to learn. So maybe Palantir is not the best example, but there's a buy signal when it hasn't crossed both yet, right? It's 10 over 20 price, or price is over 50, but 10's not quite over the 20. So it ran a little bit ahead of those moving averages. And then here's a sell signal within an uptrend, and a buy signal within an uptrend, and a sell signal within an uptrend. For sure. It gives lots of different signals in here. Your job is to put the outlier 9 together so that you can analyze this and say, okay, this is this point that makes sense to buy. We got our market trending higher, our stocks trending higher, our sectors trending higher. Everything's getting more greedy. Now we're ready to roll. That's why I tried to simplify into those steps, right? Paul, and then Brad, and then JC.
The leaf blower's gone, so you should be able to hear me now. If we change our period on the chart, like in trading view, so let's say you're looking at dailies and you have certain curve shapes, your 10, 20, and 50, and then you expand out to a weekly chart. So every candle is a week. Are we calculating differently? We're using different numbers to calculate the curves, and they'll show up in different places.
That's a really good question. That's actually why I wanted to put it in this way, because it's periods, right? So if we change to the weekly chart, this is 10 periods to make this EMA line right here. So 10 weeks, 20 weeks, and 50 weeks. And if we go to the 5-minute chart, this is going to be 10 times 5-minute candles, 20 times 5-minute candles, and 50 times 5-minute candles. Does that make sense?
Yeah.
Perfect. Let's go, Brad.
If you go back to the daily charts, it was like a light bulb went off in the middle when you were saying that, you know, the trend can't go any higher unless it crosses over that 5 EMA or the 10 EMA. If you look right where your cursor is at, as soon as that dip started happening, nothing happened. Like the entire trend was sideways until it got to that that one green candle that crossed over your 10, and even though those other the other red candles on that upward movement were all above the 10, that was still the upward movement that we need to jump on. Then it goes back, and even though you have some green ones, even, you know, when it crossed under the 10 and you have some green ones under there, it still didn't create that trend that we were looking for until it crossed over that 10.
Exactly.
I mean, it's so interesting.
Yeah. Think of it like a magnet, right? The higher that it goes, the moving average is going to try and pull up to it, okay? Until it reaches a point where it's no longer trending as with as much momentum, and then that moving average is going to meet up with it. And then if it starts going down, the magnet's going to pull the opposite direction like it did right here. So it can only move in the direction that the stock is moving. Now, like we look at this right now, we can see what's going on. But this was the moment that I had a lot of clarity with Steve Burns, because he showed me a chart like this and he said, okay, Chris, which way is it trending? I don't know. How could you even tell? I went through exactly what you're thinking right now. I completely get it. And that's why just 3 lines on here, right? You don't need a million indicators on your chart. I use 3 lines, your short, your intermediate, and your long-term moving average. And that'll tell you basically everything you'd want to know. Okay, let's move on here. The price must be above the 10
Chris,
EMA.
I got a question real quick.
Oh, yes, sir. Was that JC?
Yes.
Yes.
When I started first using outliers, there were some buy signals with a downtrend, and you said, well, I see this buy signal as selling short or buying my shorts, stuff I didn't understand. Am I right in thinking, okay, you get some, let's call them false buy signals or buy signals that are really not buy signals. If you go through the outlier 9, if you get a bad buy signal, the outlier 9 will show up red somewhere along the line, correct?
Exactly.
Because the breath or the fear and greed, that will show you, that'll back up that buy signal. So if you have a buy signal and you're like, is it really a buy signal? Things don't look right. If you go through the outlier 9, you'll get some red ones that go, no, it's a bad buy signal. Don't jump on it, right?
Well, it's not necessarily bad buy signal, but like Hopecast was saying, that would be buy to close. Beyond the scope of this conversation here,
mean?
But when you short a stock, that's sell to open.
Yes.
Then you have to buy to close.
Got it.
Yeah, we'll definitely cover that, but not today.
Got it.
For sure. So price must be over the 10 to trend higher. The 10 must go over the 20 to show the move upwards. Let me type that in. So it has to be over the 20 to show the move upward, right? It has to go over this in order for the move to go up. And then the price must go over 50 in order to reach new highs. So it cannot reach new highs unless it's above the 50 period EMA. It cannot do so, mathematically speaking. Let's look at AMD. It cannot do what all the YouTubers was saying, which is it has to go to the moon if it never crosses over the 50. Impossible. Cannot, will not, ever going to happen. Just math. Now, it can peak over and come right back around. We'll talk about that in just a moment, right? Just because the trends are moving doesn't mean they'll continue on forever. That's where risk is important, right? That's where managing our risk is important. So they're easy, they're simple, and they always work, okay? Are there better entry and exit points? Absolutely. And I'll be the first one to tell you, the 10, 20, 50 is designed to show you which direction the trend is going. It is not designed to be the absolute most ideal entry and exit points. Every stock is going to have a moving average that it is best fit to. That's what we talked about on Tuesday, is overfitting the data. Because if you only get it to work on the 3.87 moving average, then it never works because you have overfit the data. So it's going to be such a rare occurrence where it to actually work. Whereas when you do the 10, 20, 50, they are principles. The principles apply to every stock out there because it's just math. And that makes it easy. Let's see. You might win a buck or lose a buck when the trend is starting, but you'll always be there for the big move if you're consistent. So this is important here, right? Because like AMD had the spot right here where it popped over and popped back under. Now, you might have made a buck or lost a buck when that happens, right? But let's look at a stock like HIMS. Same situation. The 10, 20, 50 crossed over here, and it was a giant run. So we don't know the outcome of the trend moving over. This should sound familiar. We don't know where the outcome will be, but we will not be able to take any profits out of the market unless we follow the rules with consistency. Okay. I can't tell you that you're going to make how much of this? 27 up to 69. I can't tell you you'll make $40 a share, but I'll tell you the direction of the trend is up. And then the direction of the trend can change. And that's where I think a lot of other people on finance YouTube is they get so stuck in their way to say, the trend is going up, it must go up forever. $75 in this one stock and you'll be a millionaire, right? Well, what if that stock doesn't move? Or what if it peaks up and then peaks right back down? They dig their heels in because they don't want to admit that the stocks can change, the trends can change. And I've seen the comments many, many times. Oh, you were so wrong about this stock. Was I? Or did the trend just change? Right? We do not predict. You cannot predict what the market will do. You can only read it. All you can do is read what the market is telling you and then react accordingly. Now, mathematically, stocks. Oh, Mike, go ahead.
Hopefully you can hear me. The power's cutting off and on here, but
yes, sir.
I've seen when you're watching the trend and the 50, the price is over the 50, everything's lined up. I've seen where the 50 EMA is kind of off in a wonky position all by itself, but it's still, 10 over 20, price over the 50. Can the 50 ever be contrary to the other two and still be price still be over it, and it may be like even aiming down a bit?
Let's see if we can find an example of that.
Did you get me?
Yeah.
And
let's see if we can find an example of that. Let's go like NVIDIA. Here's a good example, right? So the 10 over 20 crossed, and not too long later, it crossed over the 50. Let me remove all my drawings on here. The 10 over 20 crossed, and then not too long later, it went over the 50, right? Because the math allows them to be decently close together. We're not talking 500 days. We're talking 50 days. So it's 2.5 times longer than the 20. And the 20 is about 2 times longer than the 10, right? So we can see how they stack together. So in order to move like that, it really does have to cross over the 50. I mean, I can't imagine a scenario where the 10 and 20 are so depressed and then cross back up that it takes them ages to cross back over the 50. I mean, maybe, hang on, let's look at Tesla on that big move down. There you go.
I thought I actually saw something like that. I thought I saw where the 50 was just someplace odd, but I couldn't tell you the stock to.
Well, I mean, they're all going to move together, right? One way or the other. They might cross, in different time frames in different manners, but they're all going to move together. So think of them like a magnet, right? Three levels of magnetism here. One of them is super strong and it's always going to follow close. One of them is less strong and it's going to move a little bit here and there. And then the last one, it's really, really slow, but it's going to get there at some point, right? We can look at it like that. And so because they all move together, at some point they should all cross over. And honestly, you're never going to get paid unless it crosses all three. Like mathematically impossible. All right. Now, stocks must go through this to go up. There you go. Stocks have to go through this to go up, and they have to go through this to crash down. So I mentioned this the other day. I want to zoom over to the 2008. The 2008 crash, and we can do the weekly candles. That'll make it a little bit faster for us. Actually, hang tight. Can we do? Yes, we can do SPX. That's really what I wanted. I want to show you 2008. I want to show you COVID. I want to show you 2008, and I want to show you the 1987 crash. Right, the three big crashes that I can think of off the top of my head. Here's COVID. Right, here's COVID. Let's go to the daily chart. I wonder if it'll zoom in like that. No, hang on. I got to scroll. Here's COVID. Look at that. It broke through the 10 before anything happened. It even did it a couple days beforehand. This is the COVID crash. We could see on the charts something wasn't acting right. It's moving up. It's above its 10. Continues to be above its 10. Closed under the 10 right here. A 10 EMA break is an exit signal to me. Now, it faltered, came back up, went up higher, faltered, went under the 10, got a close signal. First move down, how much was that? First leg down was 3.39%. I'm telling you, there were people on this date saying, buy the dip. It's down 3%, buy the mess out of it. And then it went down so much after that. I think it was down 35% top to bottom. Yeah, 34% top to bottom. You saw this coming. I know it sounds crazy, but you can see it coming. If you know what you're looking for, if you understand how to read the charts, you can see on here before things start to crash. Okay? Now, let's go back to 2000, the dot-com bust. Give me just a second here to do some scrolling. Here we go. I don't know specifically when that happened, but we're looking, let's say right around here, I guess, September 2000. Oh, I completely missed over 2008. We'll go back to that in a moment. You got to close under the 10, and then it moved down, and it moved down for months at that point, right? It peaked up a little bit, moved down. So you had warning before things started to sell off. Ozzy Ian, what's on your mind, my friend? While I go over to 2008.
I'm just wondering if you can use your delayed, like where it actually progresses forward one day at a time, to show the indicators as they come up, so we don't have the Nancy Pelosi side of the screen.
Dude, that's the next slide. Quit ruining everything, okay? No spoilers. Jeez. I trusted you. Okay. In 2008, we got a warning back at the end of 2007. Things started moving down. 2008, we got a warning right here before things started moving down. And you even got one last warning before the bottom fell out, right? Now, it's written on the page. It's written in the history books. The 10 over the 20, price over the 50. Or the 10 under the 20, price under the 50. You guys can see this, right? So the unlikelihood of a single day crash before the moving averages start crossing is super, super rare. Can it happen? Yes, I can say that it can happen. But you get warning signs along the way. It's our job to read and understand those warning signs. Okay? Now, I'm telling you this, and there's somebody going to be in the chat at some point say, Chris is so stupid. There's no way that you can predict the market. Time in the markets is better than timing the markets. How dare he think that he is so much smarter than everybody else? But the deal is that I'm not any smarter than you. I'm just reading the chart. Here's the 1987 crash. You ready? You're not going to believe this one. The 27%
Chris,
down
what platform are you on now?
This is 1987.
No, are you on Outlier or are you on TradingView? Where
This is in TradingView. Yeah.
Got it. Okay.
I don't have this data in Outlier to show you here. So this is October of 1987. Do you think that you could have got out before the big crash? You tell me. Do you think you could have got out ahead of time? Do you think you could have read this and said, wait a minute, something's not right? That changes perspective, doesn't it? Mm-hmm. Because you can see, because you can read, just like you can read English on the page. I assume you guys can read English. That you can see on the chart what it's telling you. But if you get stubborn, if you decide to go to bag holder village, if you want to be the guy who's like, no, I know better than the market. It has to go up from here. In fact, it's down right now, so I should double up. You're just asking for trouble. I mean, it would take you months let's just do a horizontal line from right here. October 1987 to win. May of 89. So 18 months basically to break even. When all you had to do was step out of the way, right? All you had to do was sit in cash and don't F up. Dave, you had a question.
Not a question, it's kind of an observation. I think the 87 one is unique because I remember my dad losing a tremendous amount of money in it. But more importantly, we've got a difference now, and I think it's an important difference. When 87 happened, people had to pick up the phone, call their stockbroker, say, oh my God, get me out of this. So I think that's why you start to see a delay. We have a built-in news delay before people actually said, got dump, sell, get me out, which is why we had such an aggressive movement that happened there. But it speaks to our technology today and what we can do to say, hey, look, pay attention, watch these things, get out of the way ahead of time. We don't have to pick up the phone to call our brokers anymore to get us out. Everybody can be monitoring these types of things on their phones, even if it's just once a day. Yeah. The writing's on the walls.
Hey, Dave, you probably heard some incredibly handsome guy on the internet with giant muscles say sometimes that all stocks are bad, but every once in a while they act right.
Yep.
I don't know. Maybe you've heard that once or twice, but it absolutely is true. Every once in a while they act right, but they're all bad. Now, to this point exactly, I'm really glad you brought this up. Reading some of the books from my mentors, they had paper charts. Like I remember reading something from David Ryan. There you go. Does he talk about the paper charts in that book right there? Yeah, like legit. They would order paper charts and they would come on Saturdays, I believe. And like phone book, you guys remember what you guys are old enough to know what a phone book is, but most of our audience has no idea. They would come in phone books with your stock chart for the week, right? So you'd have all the stocks and you'd have to flip through them one by one, right? Looking for opportunities. And now, like we can have all that done before we even open up our broker because it scans all of it for us, right? To Dave's point, we have it so much easier. Yet, so many more people blow out their accounts because it's so much easier, right? The ease of access into the market has made so many people blow out generational wealth when they could have made the generational wealth if they knew what they were looking for. Great points, Dave. What's up, JC?
If you can go back to the chart, please. Okay. We would have known, look, to put it in simple terms, if you're looking for a red candle to end up below the blue line, we should have known way before the cliff. Even to the left, even more to the left, even more right around there. Yeah, right there you should have gotten out. Correct?
Dude, you're 100% right.
Okay. So
but
you're a glutton for punishment if you got to the cliff.
Yes, you could have got out well before that, like literally weeks. This is August.
Yes.
August of 87 before stuff happened. And then here, like this is the Black Monday. Granted, to Dave's point though, the ease of access wasn't there at that time.
Okay.
But if they had seen using the trend template what was going on, they would have said, yeah, this doesn't look right. And even if they had put on a new position right here, they still would have got an exit signal just a couple days later. They may have made a buck or lost a buck, but they sure didn't lose all the bucks on the way down. What's up, Joe?
So give us the hypothetical. You got out in August. What is your gain on the other side? What's your green light tell you to get back in almost, 6 months later or whatever? What are you going to gain?
Well, I mean, that's just a break-even point, right? The break-even point's 18 months later. But to JC's point earlier, right? Here's a couple of green light, red lights, right? Imagine you could have got in here, right? Your 10 over 20 price over 50. And then you might have lost a couple bucks right there, right? Nobody's saying that this will only guarantee winners. I am still not as proficient with this as I used to be with TrendSpider. It drives me crazy. Either way. And so you might have made a buck or lost a buck a couple times here and there, but you still could have made a few dollars here, got out of the way. Could have made a couple dollars here, got out of the way. Could have made a couple dollars here, got out of the way. And so while one person bought the dip lost all their hair. Looks like Mikey Mike. Sorry, Mikey Mike. No offense. I'll be there one day. Bought the dip, lost all their hair.
Why are you picking
We're
on
on the
me?
other side, just collecting money on the way back up. Collecting money all the way back up. So it doesn't have to be this complicated, right? It doesn't have to be super hard. All you have to do is put 3 moving averages on your chart. So we're going to play a game that Aussie Ian decided to spoil. And I want you guys to be these guys, okay? When you see a spot to buy, I want you screaming buy. Like literally scream into your mic. Everybody has to unmute for this game. If you see a spot to sell, I want you to scream sell. And we're going to do the replay feature because this is such a great tool that TradingView has, and I'm so stoked about it. Okay, so we're going to go to Qs in 2023. Hold tight. Oh my gosh. Here we go. Let me find 2023 real quick. All right, so we're going to do this on basically at the beginning of 2023. Replay. 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 Hold on. It's not loading. Do not ruin this for me. Let me refresh the page.
It was all my fault.
Damn it, Deep Thought. I trusted you. Or no, that was Ian. That was one of you guys with the weird accents. You gotta have that American accent. Okay, hang on.
Deep Thought's coding
You
you
don't
a
have an
virus
accent.
right now.
You have an accent.
That's not working. No. Oh, this was gonna be so fun.
Just trail it.
It's just loading down here. It's just loading down here. Replay.
Oh, what
Just
have you
push
done?
it to the right.
So it'll work perfectly after class.
What if you? It looks like you're on the 5-minute candles. Maybe change that.
No, it's on the daily.
Oh,
Son of a gun. That makes things way less fun. Let me shut that screen down and try and pop it back open. Maybe that'll do it. Because this is such a neat tool. Let's go to Qs. Let's just try like recently.
You can just
so as
push
soon as
the
I
chart
click
all the way to the right.
Yeah, I'm all the way to the right here. I'm still not liking it.
No, the other way. So you can't see the right-hand side. Like that, yeah.
Nah, see, it's
He's
still
saying-
loading down here.
he's saying just manually pull it to the left.
I know, but it's way less fun doing it this way.
Yeah.
Let's try a different stock.
Ah,
Maybe that's the problem. No. Oh, wait. There it is. It
Oh,
came
there
to
we
life. Okay.
we go. There we go.
I'm back to
Scissor.
Qs. Dan says it's probably Aussie Ian's internet connection.
Yeah.
Oh man, now it's really struggling. I don't know. Here we go. Okay,
Oh, there you
cool. Let's go replay, and I want to do 2023. Here, replay. Yeah, wait. Select bar. Here we go. Perfect. Freaking finally.
Ah,
And it's still going slow. I wonder if it's because we're live streaming to, 8 or 9 of us that it's causing the issue.
Mine's been
Goodness
choking like crazy. I've missed a bunch of stuff. It's just stalling out.
Now it's frozen. Well, this is not as fun as I expected it to be.
Sell!
Hey, I'm having fun.
Excel? What?
Wait, did somebody say sell?
Yeah.
It's just frozen now.
Sell it. Sell it.
bye.
It's going down. Bye.
Jeremy?
Bye-bye.
Okay, hang on. That worked. Let's go back to Q. I mean, it doesn't really matter which stock. I was just looking at some examples earlier, and I was like, okay, this is very cool. Yes, normal teacher problems. Do you have to click the play button at the bottom? Yes, but the issue here is no button to click. I wonder if it's like right before the market closing and
Buffering.
that's having a difference. I don't know.
All those poor people that are still in the market right now.
S&P's taking a dive at the end of the day.
I wouldn't know
Don't look.
because it's so locked up. Exit replay. Sure. Okay. Okay. Now I can click around at least. Let's go to Q. Go replay.
Ow.
Yes, maybe if I had more indicators. Oh, this is so frustrating. I'm sorry, guys.
amongst
This is not
yourselves.
how I planned on it going.
I'm not paying for this class.
I know. And if you were,
Well,
still
mine.
wouldn't give you a refund. No refunds
What a
ever.
refund.
Dang it. Dang.
Oh, this is so freaking annoying. Okay, so it doesn't like Q's. That's fine. We'll do SoFi. This will still work. All right, cool. So this seems like it's ready to work. Y'all ready to do this? Okay. So back to the rules. When you
this will be
see
fun.
a 10, 20, 50, I want you to start yelling buy, or sell.
Yeah.
Okay. Now, what's cool about this is while it runs, I can do buy or sell on here, or go to flat. So we're basically just going to do long only to make this simple. So as we go, we'll add in the buys and we'll go to flat. That'll be the only two things we do. So y'all ready? Here we go.
So,
Oh. So we're looking for our 10, 20, 50 crossover to go buy.
That's under the 50.
Hold.
Oh my God.
Price has to be over the 50.
Oh. Don't.
Keep your powder dry.
Come in.
Oh.
Almost. No.
Oh.
Boo.
See, this is why it's
Oh, that's-
important to sit in cash and not F up.
Yeah.
Nope.
Uh-oh.
That 50 is a long way away.
Wait for it.
Ooh.
Bye.
Bye.
There we
Yes,
go.
bye.
Mine has stalled
Bye-bye.
out. There it is. I'm
Wait,
going to say bye just because I heard everybody say it.
Sell. Buy it again. Sell it again.
bye.
All right.
so
Sell.
Wow.
Wow.
See,
That was
this
a
is
weird
playing
deal.
out exactly like that cartoon. Somebody's saying it sooner than
Buy
other
it.
people.
Buy it.
Boom.
bye.
Bye.
Hold.
I'm going to dollar cost average.
Hold.
Oh my gosh.
Sell.
Sell it.
All right.
Sell.
Sell more.
Buy it.
Buy it. Buy it.
Bye.
Yeah,
Bye.
we got
Bye.
it.
Bye.
Bye.
Sell.
Sell.
We're making some money now, boys.
Right there. On the
Sell.
Buy it. Sell it.
go.
Bye.
Buy it.
Yeah, you
Sell it.
sold too
Here we
early.
go. Come on, boys.
Bye.
I haven't sold yet.
Come on, boys.
Oh,
Yeah, baby. Yeah.
Yeah,
Jason,
but you've been holding through the whole thing.
Come on.
Run.
I'm good. I'm good.
It should go up
Bye.
from here.
Done. Done. Oh,
Go,
see, I'd
baby.
have got out like that.
Keep going.
Oh, no. I haven't sold yet.
Oh.
All right.
Hey,
Well,
this
this
is
is
under
great.
$20. We don't
I'm
even look
retiring.
at those.
I'm retiring.
Come on.
This is a great example
You
as to
can
why
do
the
it.
trend
Oh,
go.
man,
Sell,
so
sell, sell, sell.
Yeah.
Holy damn.
Not yet.
Buy it.
Sell.
Buy it.
Buy it.
Yeah, sell. I would
Sell
Buy
it.
it.
Sell.
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 Buy.
Buy it.
Damn
buy.
it.
Come on,
Buy.
you can do it. Buy it.
Sell.
Sell.
Sell it.
Yeah.
I'm
Oh,
out.
yeah, there. Buy it.
Roll it.
Buy.
Roll it.
Buy it.
We're in the buy for sure.
We're in the buy.
Yeah.
Sell
Roll it. Good one.
Not yet.
Sell.
Sell.
Mikey's underwater from his commission fees.
Buy.
He's
Buy.
Buy.
bought and sold so much.
Sell it.
Sell.
Buy.
Make a few, lose a few.
Sell. Ooh, jeez.
No,
Oh, that's a trick.
Oh my
Oh,
god.
I'm
that's
out.
rough.
I've been out.
Ooh.
I'm-
Oh,
here
no,
comes
that's
the
that's
boomerang.
rough.
it's gonna turn around.
That's it. That's it. Buy.
It should
Should
go
go
Buy
back
the
down.
dip. Buy the dip.
It's in the other.
Listen to Jeffrey. Buy the dip.
Yeah.
No,
Oh, so
I hope
close.
we're out.
Ooh.
Oh,
I'm still out.
it's like upside down teacup or whatever that's called.
That's a spilled soup.
Empty teacup.
Yeah, yeah.
Get ready, boys. Get ready. Buy it.
Buy.
Buy. Buy.
Keep it. Hold
Buy.
it. Hold it.
Mhm.
Hold
There's
it.
the buy.
Hold it.
Hold it.
Still good. Still
Go,
good.
baby. Go.
Yeah. Go.
Still good.
Oh,
Still good. Sell it.
Ooh, so close.
sell.
Still good.
There we
What's
go.
happening?
All right.
Look at that. We got a 22% win rate. Not bad, guys.
Nice.
We definitely could have done better. But isn't that fun, right? Because now you're looking, you're reading it, you're understanding it. Now, of course, the difference here is you have to execute, right? It's super fun to be able to look at that and know when to get in, when to get out based on what you can see. But in the moment, that's tough, right? In the moment while this is happening, right? Especially if you're taking a loss, it's like, ooh, I don't want to sell. I'll give it one more day. I'll give it another $1 to find out.
Yeah.
Right. But then you saw where there are times where it just runs and runs and runs and runs and you don't do anything. Right. That's when you sit on your hands and don't F up because you're not sitting in cash anymore. You're sitting in a position. And then there are other times where it's running down and you sit in cash and you wait. And then again, the cycle repeats. Right. And that's why I tell you guys,
But Chris,
probably once or twice
I'm
before.
going to blame my losing
correct?
trades are on lagging internet.
Yes, there was a little bit of lagging internet, right? We would have done way better if we were all in the same room, for sure. JC, what's up?
But when you say it's hard, it's emotionally hard. If you were a robot, if we were just a robot, following the lines, hit it, you lose a few, no problem. You get back on it again. If you were a robot, you can't. You're going to pick more ups than you're picking down. You're going to win more than you lose, right? If emotions out.
Well, you could have a really low win rate. You really can. You can have a 20% win rate, but if your risk to return is 5-1, meaning that every time you lose 1, but every time you win 5, you're still a profitable trader.
Exactly.
Yeah. Very cool. That was fun. Because of our limitations here, I don't think we should try the next one. So we'll just skip to ATR. So we looked at moving averages, and now we're going to look at ATR.
Yeah.
ATR stands for the average true range, and it tells you how much a stock usually moves in a given period. Now, I just normally use the default of 14 periods. So this is showing you the volatility of the stock, right? It doesn't show you direction, just the volatility. How much does the stock move on average each day? So let's look at a couple examples here. My two favorite examples are Coke and Tesla. So if we look at Tesla, the ATR value is plotted at the bottom, and it shows it's currently at 1664. And then we can look at Coke, and that's at $1.20. So that means Tesla moves 16 times more than Coke does. Tesla's stock is 16 times more volatile than Coke stock. If you bought 100 shares of both, you're going to have amazingly different outcomes. You could win bigly in Coke, And you could lose with even a smaller percentage move in Tesla because the magnitude of the moves are so much bigger, right? That's why you need to position size using ATR. That's why you need to figure out what the ATR is used for with your stock. Every stock is going to be different on their ATRs, right? So $1.20 on Coke, $16 on Tesla. Let's look at AT&T. It's at 64 cents. We can look at Amazon at $6.53. So Amazon trades 10 times bigger in volatility than AT&T does. So it's not as easy as, oh, I'm going to buy a stock, I'm going to buy this many shares. Because you lose control of your trade in that way. And it's so important to think of it from a risk first perspective, because if you lose, you're going to lose way bigger in Tesla than you would in Coke with the same number of shares. So how it works, we look at the range between a day's high and low prices, then it averages that range over a number of days, and then the result is the average daily movement in dollars. Now, to Dave's point earlier, we've got it so easy. I remember talking to Larry Hite, the very first billion-dollar hedge fund manager, one of the market wizards, and he was talking about how he would have to calculate this day after day, right? He would do the math. You know, column 1 was January 1st. Column 2 was January 2nd. Column 3 was January 3rd, and so on and so forth. So you would be you would have to do it manually. Now it's just a number on the chart. Makes it so easy. What's up, Ozzy Ian?
I'm just wondering if the ATRs are exponential or simple.
That's a great question. I have no idea. I would imagine it's simple. On that calculation. But look at that.
Yeah,
Ozzy Ian,
I think so.
Pulling those lessons together. Good job on that. I really appreciate that. So the result is the average daily movement in dollars. So I would probably say it's as simple. So if a stock has an ATR of 250, that means it usually moves about $2.50 up or down. Now, why is it useful? It helps you set stop losses and other targets more logically.
Might be nice.
Right? Like a +1 ATR for rolling, or a half an ATR for your stop loss. Now, every stock is going to be different, because if I put a $1 stop loss on Coke versus a $1 stop loss on Tesla, that doesn't make sense. I can trade the same 100 shares. I can trade the same stop loss $1, but it doesn't make sense. It doesn't fit that stock. Right? So going back to Tesla and Coke here, Tesla's $16 ATR. If I were putting my stop loss on, I would make it half of that. So $8 and whatever. Here, let's do the math. 1664 divided by 2. $8.32 below where I got in. Now, if I did that on Coke, $8 below Coke right here. So let's say I got in here. And let's say I got my stop out point $8 below here. So if we got in at 71, let's just do the easy math here. 71 minus 8, 63. So I would go this far down. That doesn't make sense. Like from a risk perspective, looking at the chart, I'm going to click the right button. There we go. Looking at the chart, $8 on Tesla is nothing, right? Let's just mark it on here. $8 down from 341 is 333. That's about right there. $8 on Tesla is nothing. $8 on Coke is huge, right? Let's look at percentage. 11% on Coke, where this is 2.27%. So I'll ask you guys, would you rather give up 11% of your investment to find out if you're wrong, or 2% of your investment to find out if you're wrong?
Yeah, 2%.
2 all day. 2 all day. That's the point of using the ATR, right? Because now we're fitting our trade to the stock. Rather than trying to get our stock to fit to our numbers, we're listening to the market and we're getting our trade to fit the stock. So It avoids stops that are too tight, right? Like the $1 on Tesla, or way too huge, like the $8 on Coke. It tells you when a stock is calm versus when it's moving with momentum. Now, sounds crazy, but you actually want a really high ATR, because a high ATR means that a lot of stuff's happening right now, right? A lot's going on. Movements are happening, and you can profit from volatility if you understand how much risk you're willing to take, and it works for you. You can hold it and take advantage of that volatility while it's going. Volatility is not something to be scared of, but you position size correctly, and then it makes no difference if it's extremely volatile or if it's super chill, because you have a different position size for the two parts. We'll talk about that more in just a second here. So how do you use ATR? Number one, calculating a stop loss point. For me, I use the half ATR, and you can use 1, you can use 3 if you want, but I like to keep my stops really tight. That way I can trade a position size that's way bigger. Peter from the Netherlands says half ATR is a lifesaver. By trading a tighter stop, I trade a bigger position. By trading a bigger position, when I'm right, I can make more money. When I'm wrong, I have a very tight stop, and I'm not going to lose very much. So if I'm wrong, I'll know quickly, right? A great quote by David Ryan, one of the market wizards I did not work with. His quote is, a winning racehorse does not back up into the starting gate. If you get a stock that backs up into the starting gate, it may not be the right one, right? But there's always stocks that could turn around and go without you, right? Let's look at Etsy. This is one that I got in and I got out, and now it's starting to take off, and that's okay, right? I didn't get in at the best time, but I did keep my risk in check. Then we could look at something like Datadog, where I did get in at a tremendous time, and it did not back up into the gate. It took off, and I top ticked that bad boy. What's up? That's how it's done, right? When you get into a stock, it should run. If you get into a stock and it goes against you, you got in at the wrong time, and that's okay. Take the loss, move on to the next one.
So, Chris, is the ATR a percentage? Is the ATR a
ATR
percentage?
is dollar amounts. ATR is dollar amounts, right? So here on Datadog, it's $3.65. You can see that down here.
Right.
So it's not percent, it's dollar amounts.
All right. So you have to calculate your percent so you can figure out the dollar amount, correct?
Well, not exactly. I mean, it's actually pretty easy. You take your 365, and let's go to a different stock that's not all marked up here. We'll do AT&T. That's all marked up here. Let's go to Elf Beauty. Here we go. Look at that. If you bought it here and it's running like this, that's what you want to see. Now, the ATR value on that date here was $3.63. So then you say, okay, 363 divided by 2 is $1.81. So I'll take this and I'll apply my little template for half ATR, put it on the chart.
Got it.
And let's say I get in right here. Let's say we got in at the bottom of that candle, and then we go $1.81 below that point. So 66.81. That's this number here at the opening. 66.81 minus $1.81. 65. That would be my stop out point. Right there. So then we know, hey, if it comes down to 65, we're out. No big deal.
I'm out.
If it doesn't, like this, just hold that bad boy. Let your winners run out of control. Cut your losses short. Next, the second way I use it is for position sizing. Now, this is what I mentioned a minute ago. It allows you to position size based on volatility of a stock. You can't trade Coke and Tesla at the same position size. It is not the right move to go. A volatile stock needs a smaller position size than a chill stock. Think of it in your car, right? You got one car that's sport mode, like my Tesla Model Y Performance has sport mode. It is so freaking fast. 0 to 60, 3.5 seconds. It is brutal speed. I've never experienced anything like it before. And honestly, I don't need it. I keep it in chill mode 100% of the time. Every once in a while, it's a party trick. I'll be like, hey, boys, watch this. Boom, boom, let's go. Right? And it's completely silent. It's trippy. It's so silent. But there's eco mode or chill mode or whatever else mode, right? So you've got one that's super volatile and you got one that's super chill. But you could drive either one, with a couple buttons. You're going from sport mode to chill mode. And in sport mode, that's like your high ATR. You have lots of movement, and you've got lots of risk, so you need to trade smaller. And in eco mode, you have less movement, less risk, so you need to trade bigger. Here's an example. If you're trying to get to the speed limit, let's say the speed limit's 55, and you're in sport mode, and you smash the gas pedal, you're going to get there really, really fast. That's your movement. That's your risk. If you're in eco mode and you smash it, it's going to take a lot longer to get there, right? But if we want to get there in 10 seconds, one of those, you have to press the gas pedal really hard. The other one, you have to press the gas pedal lightly. Same in your position size. If it's more volatile, you pull back on the number of shares. If it's less volatile, you can go bigger, right? So the gas pedal, or electric pedal in this case, is the analogy here. And it's always changing. The ATR today can be half of what it was a month ago, or it can be double what it was a month ago. And you can't just rely on a static number, right? Anytime you put on a trade, you need to be updating your ATR. Now, I have seen a question a few times. And the question was, when you roll your positions, like I did in Hood, when you roll the positions, do you change the ATR at all? So I would say no, because like right here, the ATR was, the little cursor thing's in the way. Hang on, here we go. The ATR was 355. By the time I got out, the ATR was 379. Does it really make that big a difference? I don't think so. If we look at Palantir, getting in here, 729, 764, 760, 694. I mean, it's all in the same ballpark. It's really less than a 10% change, give or take. So I would say when you put on your trade, establish that ATR point at that point. Don't stress about the other details. Can you be more pedantic? Absolutely, if that's your trading plan. But you don't have to be. Ian, what's up?
I'm doing that. There we go. So the higher the ATR, the more volatile the stock. The smaller the ATR, the less volatile the stock. Is that correct?
That is correct. Yes, sir. 100%. All right. Now, using this in position sizing. So this is a slide I show every time I put on a trade, right? Take your account balance, multiply by the risk that you're willing to take, and then divide it by 2 times the ATR gives you the number of shares. So we're going to focus on shares and not the options contract here. So looking at this, the smaller ATR will give you more shares because it's in the denominator here. This is, let's call this our middle point here. This is average ATR. This is small ATR. This is high ATR. The smaller it is, you can trade more shares. The bigger it is, you have to trade less shares. And this allows us to define our risk in the trade before taking the trade, because now we know how many shares we're willing to take. Okay? Because you can't trade 2 different stocks, any 2 stocks with the same number of shares. Some similar number, but each one is going to have a slightly different ATR. And lastly, with ATR, you're building your plan to suit the individual stock. You can't blindly buy the same number of shares across the board, and this allows you to customize your plan to have the right risk and know the right points on the chart where you're going to get out, or where you're going to roll up, or you're going to do whatever you're going to do. But it allows you to fit your plan to the stock and not try and fit the stock to your plan, because the stock's going to do what the stock's going to do. You can choose to go along with it and size correctly for it, or you can let the stock just take you out. Well, so that ends all my slides. Let me ask you guys, what questions do you guys have? And then we'll do a Q&A in the chat. And I would appreciate if everyone in the chat could keep the Q&A to the topic of today's lecture, please. Any questions or feedback from you guys?
I think we got to do the replay game again. And if we have to poll the audience, we could do that.
Dude, I really wanted to play the replay game. I was so bummed that it was not working so great. So annoying.
It was awesome. It's worth trying again. That was a
You
hoot.
can play replay bingo.
Replay bingo. Yeah, actually, little secret that I'm not sharing with anybody. I got in trouble for Big Money Bag Holder Bingo.
Oh, I haven't done it again.
Somebody didn't like it, and they sent us a nasty gram. And Mahesh is like, "Cut it out. No more bag holder bingo," which I'm really bummed about.
No.
But we'll come up with some other form of bingo. We can have all kinds of fun bingo.
It's a bit nasty. It's a bit nasty.
Yeah, I didn't want to be mean, but they were saying I was just far too mean doing it. Sorry. I was just trying to teach some good stuff in a fun way. Martin says, you mentioned stop loss points before. Do you also use those when trading options? So that's a great question. When I'm ready to get out on a chart, and I said, if it goes from $100 to $99, that is my exit point. The price of the option is going to be what the price of the option is going to be, right? I can't change that, but I do not put any sort of stop loss in on my options, right? I know approximately how much it's going to be using approximately the same delta every time, but give or take, that's what it's going to be. Like earlier this week, I had some giant wins, but my 2 losses, one of them was 74 basis points in my account. Doesn't mean anything to me. And the other one that I just got out of, which was SMCI, that one took me out by like 3% on my account, right? When I got out right here. Because I positioned size correctly, I didn't stress, right? It's part of the game. I can't have a 100% win rate. But when I do, dude, I'll be sure to let you know. All the trades will be on YouTube for free. Jim Cramer bingo. We could do that.
We have a lot of questions in the audience about sizing and how the ATR plays in and everything. And I would almost just say, subscribe to Outlier and get access to the trade size calculator, and there's your answer. I mean, it does it for you.
Dude, for sure. I appreciate that plug right there, Joe. Very, very nice. Corey has a question. Once you determine the number of shares, how do you convert that into the number of options, or do you just divide by 100? So for me, because I always trade the 80 delta, makes it simple. Number of shares, divide by 80. In fact, I think that was on the slide right here. I'll pull that up. Yeah, because I'm always around the 80 delta, it's just number of shares in that calculation divided by 80. Now, if you trade a different option contract and it's the 50 delta, you would divide by 50, right? You can customize that to your plan as well. Let's see. Yes, JC, what's up?
And you get the delta is on the options tree, correct? On the options
Correct.
chart. And you will
Yes,
select.
you don't have to do any calculating there. It should be right inside your broker. And if it's not, you got the wrong broker. Go get a new broker.
Got it. Oh, question. And I asked you this through email, and if you want, you can just deal with the email. For somebody looking for new, I know that Outliers associated with Tradier, but a person who's got memberships with Robinhood and Public and this and that, and we just want to go simple. One, transfer everything to one broker. Okay, Tradier would be an awesome broker, or it would be your recommendation.
Yes, so Tradier is our recommendation. We've got a business association with them. What's actually really cool about that is if you sign up at trade.tradier.com/outlier, Tradier will actually refund you $150 into your account for being an Outlier customer. So yeah, it's a pretty sweet deal, right? Free money basically to use Tradier. I will tell you, honestly, it's not the easiest platform I've ever used. There are easier ones out there, but it totally works, right? It allows you to buy, allows you to sell, allows you to do everything that you need to do. But there are some learning curve aspects of it for sure. Ian, what's up, my friend?
I just wanted to mention that we can't get Tradier in Australia.
Good to know. But that's why I mentioned that too, is that any broker works.
We can't sign
Any
up.
broker works.
That's okay. Yeah.
Let me follow-up question. It looks like, so basically when option trading, you just use the position size to maximize risk to minimize risk because you can't do anything once you bought the option contracts except to roll them maybe. Well, of course, every time you put on a trade, you have risk in the market. And we want to eliminate risk as much as possible. Is it possible to have a zero risk trade? Yes, if you roll it. It's not initially. So we want to minimize that risk up front. Now, it sounds crazy, but you guys have seen me do it, right? Now that you've seen me do it, it's really cool, right? It's super duper cool. And I still haven't bought those speakers from Costco yet. I need to do that. I got that Costco refund check. You know, I'm sure you guys have Costco too, right? You get that refund check once a year. And you're like, sweet, here's a couple extra $100 for free. Let me go spend another 1,000 at Costco because you can't walk out the door spending just what's on the check. You know exactly. Okay, let's see if there's any other question here. Amy asks, in the software, you said there's something that does not update until overnight. What is that? Can you force an update? Isn't this delayed overnight costing you important info? Fantastic question. Outlier updates once a day. The entire platform updates once a day. It's at, I believe, 10-ish p.m. West Coast time. I trade at the end of the day. So I'm taking the data from 10 p.m. the night before, and I'm trading with it at 2 p.m. Central Time the following day, and I'm making great money on it. Can you do others? Can you do it any faster? You could absolutely trade it on the open, but personally, I like to trade on the close. And I don't know if it's costing me important info. You could look at it that way, right? But as of right now, I don't think Outlier is going to be updating any sooner than that.
It's kind of nice that it updates once a day, honestly, because a guy that likes numbers like me, if that number is going to change 6 times a day, I'm going to want to redo all my work 6 times a day, you know? And another example on that one is one time you showed a chart and you said, show me what the cost was at noon. Can't do it.
Yeah. Show me what the price was on Tuesday, May 20th at 9:37 a.m. Good luck. But I can show you what the price was right before the close. Easy. I can show you approximately where it was at the open. Easy. And so when you're looking at charts like this, if you're going back through your data, this is way easier to keep track of. Plus, it fits my lifestyle, right? And that's an important aspect of trading that I don't think most people talk about is lifestyle fit, right? If you are so busy that you cannot do this, probably shouldn't be doing it. When I first started trading, I traded from my iPad underneath my desk. That was the only way I was able to do it. I had a data plan on my iPad and I was at my corporate job and I'd be under my desk wheeling and dealing, making trades, right? I don't know what they were thinking I was doing under my desk, but it certainly wasn't that. You guys get your minds out of the gutter. I was making money. Okay. So you've got to figure out lifestyle wise how to make trading work for you. And for me, the last 30 minutes of the day, I know everything that I'm going to do. All I have to do is execute at that point. And that makes it super simple. Ian, what's up?
Just to that Amy's point, I'm finding that the outline 9 template that we use, it did delay, is actually a leading indicator.
Dude, great point. Absolutely. And there was somebody yesterday. I was a little rude. I apologize, JJ. I remember your name, but he was saying, can't we get this any faster? And I was like, listen, dude. And I showed, we've been seeing the same data for a week leading up to this, and we're finally getting the confirmation of the data that we saw. Kind of like we talked about earlier with the trend lines and everything, right? Before the crash happens, it has to go through those other moving averages. It can't do it without going through the moving averages first. So it's kind of like that, right? You get these heads up and then the moves happen. Dave, you had something on your mind.
Yeah, I just wanted to point out here too. That Steve Burns video, he made a great point of saying the biggest moves happen in the overnight. And, committing yourself to doing the trades at the end of the day, to me, means we got the signal. The market has proven itself to me that day. In other words, we didn't have something happen. The 10 is still above the 20. Everything is still in alignment. It's that final check, based on that signal. Taking them early, I still don't know what the market's going to do. I got 8 hours of potential or 6.5 or whatever it is of exposure there. I don't know what it's going to do. To me, Outlier gives me that extra time for the market to prove itself and validate the signals that we had before entering. And I think that's critical. So many of these things, you take the signal first thing in the morning, man, you are toast.
Yeah.
But letting the market play out, minimizing that exposure, taking it at the end of the day, we've all seen great gains that have happened with that. So I think that's really an important point, that, you know, we don't need to be doing this swing trading at the speed of light. Even though I day trade and scalp and, you know, do that too. This is not that. This is about being very circumspect in your investing, in your trading.
Yeah, well said. And I appreciate that, Dave. That's really great. It's great to hear how other people are using it besides just me using it, right? Because, you know, my job is to sell Outlier. Let's be very honest here. As chief marketing officer of Outlier, my job is to make sure people are buying Outlier. But it's great to hear from you guys how you are using it profitably, right? You're using it to save time, make money, and start winning with less risk. What's up, Mike?
Can you remind me how much Outlier costs?
Since you asked, you can actually get it for just 82 cents a day, Mike. I don't know if you know this. 82 cents a day if you get the annual pass, and that is 64% off the regular monthly price. And if you're on the monthly plan, it's a one-click upgrade, and you'll save 64%. Thanks for that,
Man,
Mike.
what a great deal. Yeah, he did not ask me to do that.
Okay, so one last question, and then we'll get out of here. From Theo. Chris, tell us again, by looking at the candle, is the bottom of the closing price or the opening? This is a great question. This is actually coming in a lesson further down the line. But since you asked, a green candle like this, the bottom of it is the opening. The top of it is the closing price. But on a red candle, it's the opposite. On the red candle, this is the opening price, and this is the closing price. Great question. Now, on a candle like this, what you'll see here is this is the opening price. It went up a little bit. The wick is what that's called, the small lines that come off the top and bottom. It wicked up a little bit. It wicked down a whole lot. And then it closed at this point. Then the following day, it actually gapped down that morning. So even though it's a big green candle, it started off a big losing day right here. In fact, let's measure this out. Here to here, it was down 5%, down 5% at the open. But during the day, more and more buyers stepped in and pushed the price higher and higher and higher, and it ended here. So fantastic question, Theo. Thank you so much for asking it. So listen, I really appreciate all of you guys coming and hanging out with us today. Not just the Alpha group, right? But all of you guys who are making this awesome. The way that you can pay me back if you are learning anything at all is by telling everybody you know about Outlier University, right? And of course, right now, while the master key's locked up, while the Outlier 9 is locked up, sit in cash and don't F up. Thank you guys all for coming. I will see you on the, I'll see you tomorrow morning. Have a fantastic day. We'll talk soon. But don't forget to click one of those videos. Talk later.